Hi everyone, let's start heading into technical tools. The first one would be trend lines. As it is the simplest one, it's sometimes the hardest one to master. Now many traders don't see the value of trend lines because they think that okay, I just connect this and this and the trend line is done. It's not that simple. Obviously, with each and every technical tool you have to practice a lot and check the history and check the present how it behaves. So let's just check what types of trend lines do we have. I'm just gonna go over to a monthly chart so I can show you clearly. So you can find trend lines here. I'm always using this one because I can make the angles however I want. So we can differentiate between an uptrend, a downtrend, and obviously a sideways trend. To make a downtrend, you need at least two lower highs, they say. I would say that you need at least three, and after that more confirmation that actually this trend is taking place. But let's see. So here you can see we have almost 4 touches. Now it's very important that you cannot force the trend line into the candles, because the more you are trying to do this, the worse your trend line will be. Because these areas here, where it's almost touched, these are, especially as I said, areas and not just points. They act as support or resistance areas, and you cannot just imagine them as a exact point where price should even change direction or just break through. No, these are areas which you have to check thoroughly. So this is a downtrend. Okay, this is a downtrend and we have a descending trend line. Now let's see an ascending trend line. Let's say that would be a very good example, because as soon as I draw it, you will see something. It's very steep, and as you can see its steepness, there is a higher chance. In trading, they say the steeper a trend line is, the higher the chance that actually it will be broken. And as you can see, it was broken after, well, you see we have like 2 touches here, which is much weaker than a proper trend line, which is not that steep. But still, we have an uptrend. So again, areas where you can consider uh, some kind of price action. And obviously we had here the breakdown of the trend line, and it was just maybe a backtest because price then started to go up, go higher and higher, but still our trend line was broken. And we have the last one, which is the sideways trend, and basically it's very simple. Here the last couple of months and here you can see euro dollar exactly that trading in a range, not even finding if it should go up or down. So this is what we call a ranging market, and I just made a channel with trend lines. As you can see, I don't have to force my trend lines, but if I really want to force them, I can force them here, but there is no point. You have to give them a little bit space and make it as an area. That's why I'm not using trend lines that frequently if I'm when it's a ranging market. What I'm doing is that I'm having the shapes. So I have the rectangle and I just make a rectangle here and here, and from this I will realize these areas and not just consider them as exact points of change of direction or a breakdown or a breakup, or something similar to that. So just to recap, what we have to take into consideration: we have 3 types. We have the downtrend, we have an uptrend, and we have ranging market. A trend line becomes stronger if they are tested more times. As you can see, it was tested, well, if I want to be very strict, 1 and 2 times, which is nothing. It was tested 3 times, our downtrend trend line, and it was much stronger. So as you can see, price was just heading lower and lower. And we shouldn't force a trend line to fit the candles. Never in your life. You shouldn't do it. And obviously, last but not the least, the steeper it is, the less reliable the trend line is. Thank you for watching this video. All I ask from you is to practice, practice and practice as much as you can. Thank you. Bye bye.